Right, to talk about the big acquisition and the news of the morning, which in a sense has got everyone excited in the auto space, which is Mahindra has acquired majority stake in SML Isuzu. I've got the man of the moment, which is Rajesh Jejurikar from Mahindra Mahindra. So let's first understand the thought, the process, and where this acquisition would actually take the non-SUV and the non-so-called farm automotive business of Mahindra Mahindra. Rajesh, fantastic to have you back on ET now. Thank you for joining us. Mahindra & Mahindra of late has been thinking in terms of scale, skill, size, and you've demonstrated in every business of yours. With this acquisition, how will things change? Because you will not become number one, you will not become number two. The aspiration for Mahindra & Mahindra has to be one or two in whatever businesses they do.
Yeah, so firstly, stepping back to what you said, there are several segments or categories in which we've become very strong and are number one. SUVs is one on revenue market share, tractors, last mile mobility on electric three-wheelers, and of course LCV less than 3.5 ton. We have more than 50% market share. The one segment in the auto space in which we play where we've really not done so well has been the commercial vehicle more than 3.5 ton segment. There our market share so far has been only 3%. It actually pre-COVID till 2019 had gone up to close to 5%. There are several factors, which is the transition to BS6, the shortages on components that we were going through, which we had to prioritize then, for example, fuel injection pumps and so on, which led to a decline in that category to a level at which we are now, and we've improved a little bit over the last year and a half or two. This is the next area of focus for us. Now, it's a huge segment by way of overall value of segment. Profit pool is very good in this segment as well. When you look at the, they're all listed companies, so we know the numbers of, the kind of profit pool that exists. The size of the market is 130,000 crores plus. This acquisition gives us a strong enough presence to start building on. So from a 3% market share, we go to close to 6% market share. From a 2,500-3,000 crore revenue, we go to 5,000 crores plus revenue. So when you look at the absolute size of the pie, even at 6%, it's 5,000 crores plus, which is not a small size of revenue. We've said by F31, we will aim to be 10 to 12% market share, which means 10,000 crores plus. So 10,000 crores plus in a 4 to 5 year is a reasonable ambition. And then from there on, we look to, build on. And I think it's premature to say that we can aim to be number one at this stage. That's strong players, very well entrenched. But doesn't mean that you can't be. A few years back, people said that SUVs, you have no chance. But, we've gone on with time, with right products and multiple actions to go on to be doing very well. And hopefully in this segment too is the only segment we haven't done well in. And this is our next area because we believe that the size of the market allows a scale up.
But this is nowhere an early indicator like a canary in a coal mine that the car business or the farm equipment business is peaking out, because companies think of diversification when they know that they're reaching or nearing the peak in the core businesses.
Yeah. Well, this is core in a way, right? Because if you look at LCV less than 3.5 tons is a very important part of our core, which is where we have pickups and a 50% market share. When you look at SML, Isuzu as a potential target company that we are acquiring, their strength is not in the medium and heavy commercial vehicle segment. It is in the LCV and the ILCV segment. In fact, when you look at LCV buses, their market share there is 16%. Mahindra's market share in the LCV buses is 5%. So combined market share of 21% gives us a strong position there. The bus segment, and this is not the intra-city, but the intercity, which is schools, staffing, tourism, is an opportunity for growth. And having a presence of a combined market share of over 20% there gives us an ability to think of becoming number one in a sub-segment over a period of time. SML has an electric bus ready. We had not done any work on electric buses. Electric buses, they will be a very fast-growing segment as well. So I don't think this is an indication of the fact that other parts of our business won't grow. It's just that what's the new avenue for growth, not just for the auto business, but even as a group. And a 5,000 crore business which can go in the next 3 to 5 years to 10,000 crore plus is not something which is insignificant.
So this business which potentially could go from 5,000 to 10,000 crore, 2, 3, 4, 5, that is the duration what we're discussing. Will that happen in Mahindra and Mahindra, or will that happen in SML Isuzu, the listed entity?
So this is right now at least SML Isuzu as a separate listed entity will stay a listed entity. The trucks and buses business of M&M stays within M&M. We will look at how we fully synergize operations and resources, talent, platforms to get the growth and scale. So we will have to, in our mindset, even though they are in two separate legal entities, think about it as one.
Okay. Now, in terms of the whole approach, what you will have with this new acquisition, what happens if the open offer does not go through? I mean, for somebody who owns the stock, you would say, look, the Mahindra Group has kicked in. Rajesh, I heard him on ET now. He's given big plans of where the business would grow and synergies would kick in. What sense does it make me to tender my shares at the current open offer price? If the open offer fails, then what will you do?
That's actually absolutely okay. I wouldn't use the term fail at all because every element of the strategy, given that we have a majority shareholding now, every element of our strategy we don't need 75% shareholding to accomplish what we're setting out to do.
So the objective is not to increase stake and then delist it. Irrespective of the open offer goes through, does not go through, how much you get back in the open offer, you will keep this entity listed.
Yes, absolutely. Okay. And hence it's irrelevant from our standpoint whether the open offer is fully subscribed or not. It does not change our plans. The need to go in for a 26% open offer stake is as per SEBI regulation, and that's the reason we need to go through it. If it's fully subscribed, we are provided from approval to acquire all of that. If it doesn't change our plans at all.
But why would you like to keep it listed? I mean, more disclosures, more board meetings, more analyst interviews, more television interviews.
I guess we've got into the habit and don't want to miss out on the fun of doing all of that. But I think there is the process of anyway delisting something is also not that simple in the Indian context. So, it's a listed entity, it has its own standing, its own brand, and, it's fine. And why put in more capital at this stage anyway?
No, I wholly appreciate the fact that I'm asking a follow-up question because this is a price-sensitive question.
Yeah.
What you're telling me, and we'll archive this one, that the Mahindra Group and Rajesh is confirming that SML Isuzu will remain a separate listed entity. What happens down the line, we don't know. But as of today, there are no plans to delist it.
Yes, I'm confirming.
So we're archiving this data.
Yes, absolutely.
Wonderful. Now let's understand the market dynamics. Has your hunger for acquisition just about started again? Because you could have easily built a platform where you could have taken your existing, LCV business from 5,000 to 10,000 crore. You've demonstrated the ability in your SUV business and other businesses. The fact that you're acquiring, does that mean that you are now thinking of buying growth?
I think, Nikunj, the answer to that question is a calibrated one, which is, are all the boxes getting ticked appropriately to do an acquisition? Cultural fit, strength of the company, strength of the brand, what does it add back, the fact that it is a profitable business, the fact that it has very frugal operations. And we have a very good comparison point because of our presence in Swaraj Tractors. Swaraj Tractors in a way and SML are mirrored companies. They were all part of Punjab Tractors Limited at one point of time. So when we see SML operation, we can kind of mirror what we saw in Swaraj. Very frugally run, very, a high level of simplicity, down to the basics, high level on product and focus of product and technology. So we see all of that, right? So it's the question is, what do we see in a company? And when we see all the right things, then of course we will want to look at, an organic acquisition. I think in this segment it was necessary because it's not an easy segment in which you can grow organically without having a critical mass. And that was the learning that we've had. So, combining the two together, we believe 5,000 crores plus 6% market share gives us critical mass, makes it the number 4 trucks and buses player, which then is a position from which we can play.
Would you be eventually rolling out the platform for bigger, tonnage trucks? Is this beginning of Mahindra and Mahindra's entry into CV and the bus market?
We are not looking at CVs in the MHCV space. I mean, buses in the MHCV space. Of course, we have a wide range of high tonnage products on the trucks, truck movement and goods movement space within Mahindra. We will not push SML into that space either because their strength is LCV, ILCV. We'll build the portfolio from there. The Mahindra brand will have realistic ambitions on market share gain in the HCV, MHCV segment because that is a very competitive space. We are currently at about 3% share. For us to go from 3 to 5, we think is a good aspiration. The real growth we believe will come out of the LCV and ILCV segment, and that is closer to our less than 3.5 ton from a mindset and type of target group compared to what the big fleets are.
Mahindra & Mahindra also gives us a guidance and a forward-looking guidance, which is on return ratios, return on equity, return on capital.
Yeah.
Because of this acquisition, will your guidance now for FY26 change? Would you have to rework your numbers? Because obviously this will come at a cost. Synergies will take some time. Initially, you will have to invest a lot more. That means return on equity, return on capital will change.
The return on equity number, as Anish has reinforced several times, and I know Nikunj, that's a question you ask him often.
No, after this acquisition.
Yeah, I know. He is always a weighted return.
Yeah.
It's so the mindset or the thinking that Anish has been advocating is we have to invest in growth businesses because investors also want growth from us, right? And if we just look at ROE and then try and increase our ROE indefinitely, then there will be no growth, and that is going to be counterproductive to investor point of view as well. So there will be a time businesses which we invest in which will be growth drivers, which in the short run may not have the same ROE benchmark, but over a period of time they need to get there. And that's how this will be as well. Now in the overall scheme of the returns that we are making in both the auto and the tractor business, where when you see the ROCs, they're well beyond 35-40%. This in the scheme of that within the auto business will round off honestly.
Okay, so I look at Mahindra & Mahindra and I define Mahindra & Mahindra in the following manner. Enviable market share in the SUV market. Real, formidable, not India's success story, global success story. Number one in the tractor market and a dominant market share there. Trying to make it big in the LCV market.
But number one in LCV less than 3.
Less than, yes, number one there also. Now trying
that is 50%.
That's 50% market share again. Thank you. But there's also a chotu sa two-wheeler business somewhere in Mahindra & Mahindra.
Yeah.
It looks like more like a lab experiment.
Yeah.
So can I say that that is the missing part where you would go after? Because for you to become a formidable player in the two-wheeler market, it will not be easy. Either you'll have to shut it down or keep it like a lab experiment, or you'll have to acquire something. And your smile is telling me that you're thinking something.
No, I was just, knowing you, this is a question totally out of the blue, but let me try and answer that by way of how we're thinking about two-wheelers. We're definitely not going to play in the mass two-wheeler segment. We've gone through that phase and we are clear there is no right to win there. The play that we are in right now is in what is Classic Legends Private Limited, which is where we have the Java, Yazdi and the BSA, 3 brands. We still have work to do. But with the recent launches of especially the Java 42 FJ, we're beginning to see good momentum or beginning to see momentum pick up. There's work to do on channels, so on and so forth, but overall the product acceptance is good. So right now that's our play in two-wheelers. That is something that we will focus on and build on progressively. But we're not looking at a mass two-wheeler play. We've gone through that.
How's the big picture looking for business? Has the slowdown impacted you?
Wait till 5th May.
No, we have your dispatch numbers, so we can talk about that.
So our dispatch numbers for the last quarter and April have been, April will be out soon, but for the last quarter have been healthy. So it's been a strong quarter growth for us on the volumes. And the impact of that on profits you would see on the 5th of May.
So I'll not talk about Mahindra & Mahindra. Let me talk about 2 companies where numbers have come out. One is Tesla and second is BYD. And again, very interesting trend there. Tesla is with our viewers is that, oh my God, what's happening in the EV space? Since you have entered into the EV space, what is that big trend which you see emerging, given that at global level, a lot of trends are emerging now?
I won't read anything out of the global trends based on the 2 brands that you spoke about, because I think there's a different dynamic at play there by way of who's gaining and who's losing. But coming to the India story, our proposition around for EV SUVs has been not to launch them as EV first, but to launch them as lifestyle aspirational SUVs, and that's exactly what we've done. Most of the people who are buying us had not thought of an EV when they've come in and booked, or when they've taken deliveries. So that's been our strategy. We don't want to put EV at the forefront. EV should be the experience that you get, and the EV experience is absolutely amazing. I mean, I'm driving a 9e for the last now 2 weeks, and it's just a totally different experience. So if you haven't driven it, drive it, and you won't ask this question.
No, I mean, it's absolutely incredible to see the design touch, which clearly some of the new EV vehicles of Mahindra and Mahindra offering. Just reminds me as a child when I would look at all those Batmobiles. Really fancy. Those were toy cars which we would admire for their sleekness. Today, those toy cars have become reality on Indian roads. Yeah, no, they are indeed, and that's how people are responding. And that was the strategy. The strategy was to have absolutely head-turning design, real tech, top-end features, all at a price which is within the realm of affordability of a segment. So I think that story is playing out, and maybe more of that on the 5th. So in general, if you have to look at the big picture for FY26, whether it's for Mahindra and Mahindra's auto business or tractor business, or for the group per se, are you feeling confident that the economic slowdown is behind us, things are looking up? I mean, are we in for a slightly better, optimistic outlook than what we were, let's say, the beginning of the year in Jan or Feb? You spoke about what I can say on camera, and you used a word to record it. If I say anything on this before 5th May, it's not going to be good for me. So let's hold all future statements till 5th May. So I'll talk about something which we can talk about before 5th May, which is that this entire tariff which is at play for the Indian auto industry. There is a market view that, oh my God, this is like a problem for the auto industry. But what is the reality? How much do we export to US? How much does Mahindra export to US? Can Indian industry handle if tariffs are at play? What's the big picture without again getting into specifics? We don't do any auto exports to the US. We do have some tractor exports, but... that is a rounding error? Sorry? That is a rounding error for you, even if you stop at 2 US? I mean, from a standpoint of the impact it has on our India P&L, it's not a big number. Of course, it has some impact on business there, and we have a very strong business there, and our brand has been well established. So, by the way, the tractors don't get covered as part of auto. It's in the ag space. So. But right now, of course, the 10% is applicable on everything. So it's not a category specific thing. But we have no auto exports to the US. And how large are Indian auto exports to US? I think Indian auto exports are not high. There is an Indian auto component industry which exports to US. But Indian auto OEMs, I think close to nothing goes to US. And I think one reason is it's a left-hand drive market, and a lot of the OEMs do the right-hand drive models primarily here, is what I believe. But we have no exposure to that. So let's wait and watch what's going to happen. So being on the right side is helping you? Sometimes yes, sometimes yes. You're on my right side, I'm on your wrong side. So that's just a coincidence. But thank you very much. Thanks, thank you for lovely chatting with you, and we look forward to continuing conversations on the 5th. Yes, forward-looking guidance, FY26, margins, and my favorite question, return on equity, return on capital. Absolutely. And I'll maybe request Anish to come in for that. Thank you very much. Thanks, Nikunj. Bye. Lovely talking. Thank you very much.
If you like this video, then like, share and subscribe to ET Now.